Sorry for the delay. This is Matt Tooher with Insurance Agency Marketing. Thanks for joining us this morning. Had a little technical difficulties getting this started here today, but we'll get up and running here. Thanks for joining us here in today's webinar. We'll be doing with EquiTrust this morning on the bridge annuity, and also be discussing some high points doing stretch IRA contracts. I know EquiTrust has some really good options on that side of the market, and appreciate you joining us here today. To go over these details, thanks to Andrew for joining us from EquiTrust. He'll be jumping on here shortly to review some information on some of the opportunities we have with EquiTrust on the bridge annuity. Great long-term care combination annuity product. Great program to have available to your clients there in the field. We do continue to offer our new business builders. We have different levels of production you can hit in order to attain different programs are available to you on seminar systems, radio shows. We have cash incentives. We also have iPads, different options you can choose from based on your production in the first 180 days of being licensed with IAMS. We also have a referral program. You can earn additional dollars based on referring agents to IAMS. You receive an additional $50 bonus up front. You'll also receive different overrides based on their production on indexed annuities, life insurance, and MYGAs, MYGAs. We also do marketing reimbursement. We reimburse your costs for advertising. I know we do put $100 per $100,000 of premium in a bank account for you to utilize based on your advertising costs. We do reimburse half the cost when you send in the receipts based on your balance of your marketing reimbursement account. So great for IAMS to help you out with some of those higher costs these days. I know the inflation has definitely hit all of us, and it's not getting any better anytime soon. And unfortunately, we think that rates are going to continue to go up. So we're glad we could help you out with some of these advertising expenses. So definitely keep that in mind. We've got a great back office support team here at IAMS. We have a number of really good people in both our new business department, creative departments, a lot of good stuff that we can help you out with based on those. And if you do have any questions along the way when we're doing the today's webinar, you can go ahead and get those asked. Would be great. Be glad to get those answered for you based on any questions that may come up on your side. I know we have really good people on the creative team. We'll be discussing them shortly. But new business wise, we scrub the applications. We get back in touch with you if we see things are missing. You know, maybe if you're doing e-apps, definitely a better way to go. They won't let you complete the app until it's 100% complete. And then we go ahead, and when that's forwarded to us, we review the app quickly and make sure everything makes sense. Then we get those forwarded on to the home office and get those going for you on your side. We got a great group of individuals on the marketing side on both life insurance and annuities, and really a great combination there on both sides of the market. We also have our own website, the www.iamsinc.com. Really good place to go to review current interest rates, look at supplies. Maybe you need to go out and write an app tomorrow. You need to download applications, additional forms to go write that business. A lot of that information is available on our website. Maybe look at the current interest rates based on an individual that's 85 years old in the state of Montana, looking for the best 5-year rate out there. You can go under our website, look that information up. It's going to come right up for you, and you'll see the best rate based on that individual. So a lot of really good tools you can utilize on the website we have here at IAMS. We have our latest annuity grids on there, long-term care grids. You can do term quotes. You can look up all kinds of different information on industry links. Maybe you want to look at the AM Best rating of a company. You can go on there and take a look at the AM Best reports on that. We also have a lot of very valuable information you can download right there on that website. As I mentioned, we do utilize e-applications, make up about half our business right now. It's coming through on e-apps. I know Firelight is the big tool we use on the annuity side. I believe iPipeline and Sunfire are more on the life insurance side, but we see a lot of our companies using Firelight right now. Most are using that platform for the e-application sides of the market. Really a good combination there. And the way you can utilize, once you've done a couple of e-apps, it's much easier doing business based on those e-applications, and a great way for clients to get those cases through that much quicker. Less slowdowns based on reading handwriting, fault, information that they inputted wrong based on, not be able to read some of that handwriting. So definitely a better way to go by using the Firelight e-application systems. To mention, we do have a great creative team that can help you out with doing different advertising. You want to put together an email campaign. You want to do redo your website, update your website, create a website. They can help you out with all of that. You want to do some social media advertising. They can get you on some social media platforms and utilize those for your advertising purposes. I know that utilizing social media is definitely a much less expensive way to go than doing mailings or postcards, and they can help you out with that whole situation. So if you're currently doing business with IAMS and you do have a marketing balance in your system build up, we can go ahead and have you utilize some of that to have the creative team do some work for you and help you with your future advertising needs, build up more business, and it really just runs down the road. They're a great way to have us help you without those advertising needs and everything else that does come up on that side of it. We do have a wealth management side of IAMS. I know we've seen this side of the business really jump up the last few years. I know that we see a lot of our top agents utilizing the wealth management side. Probably about 80% of our top 30 managers also have a securities license now, where that number used to be around 10%. Now it's at 80%. So it's really jumped up in popularity based on what we have available out there. If you do have interest in getting some additional information on the wealth management side of IAMS, I'd be glad to get that done for you. We do have a great group of people on that side of the business. I know Duncan Smith has been in the security side for a number of years. Can help you get up and running, help you out with getting your business moved over if need be. He has a really good platform he uses through this IAMS wealth side for clients to do quite well when the market's doing well based on some of the investment strategy that are being offered through that side of the business. But if you do have interest in getting signed up with our wealth management side or looking more into that, you want to check off yes on the poll I just launched. Be glad to have someone that side give you a call. I will leave this open for another 10 to 15 seconds. But if you do have interest and have one of our wealth management specialists give you a call, I'd be glad to have them contact you. We'll go ahead and get that closed up here. Keep things moving along. We also offer our life and annuity academies. I know we just had one last week. EquiTrust was good enough to co-sponsor this last meeting. We had about 32 people at this last meeting. We held that in Omaha at our home office here in Omaha, Nebraska. Really good block of speakers we bring in, a lot of good sales ideas, helping you advertise your business, getting in front of more clients. I know that we had a really good speaker come out from EquiTrust, Leon Fitch, did a great job with that presentation. Really great program he went over based on what EquiTrust has to offer. But if you do have interest in coming out to one of our meetings, I just launched another poll. We're going to do another one in September. I believe it's like the 25th or the 27th. It's also going to be held here in Omaha. We do take care of your transportation. We put you up in a nice hotel, food, beverages, everything's taken care of for you. Typically runs like a Wednesday evening through a Friday morning. So the meeting would start around 5:30 p.m. on Wednesday, runs all day Thursday until about noon on Friday. But if you have interest in coming out to one of these meetings, I know we always see a nice boost in production from the attendees. They always take really great information home with them after they attend one of our meetings. Great chance for you to increase your business based on some of the things you'll pick up at these academies. So I know Andrew was at our meeting last week. He really did a great job with the clients that were there, and he went over some of the ideas that EquiTrust offers, and a lot of great information he covered at the meeting itself. But if you would have like to come out to one of our future meetings, I know we got one in September. Probably won't do another one until 2025. We'll keep you posted on our upcoming meetings. I know we should be bringing in between 30 and 35 into our Omaha office. If we do one in Des Moines, we typically bring in around 40. But it's a great chance for you to really energize yourself with some of the latest ideas and some of the things going on. But if you'd like to come out to one of our meetings, be sure to check that off. Yes, I'll just one for another 10 seconds or so. And I'll go ahead and keep things rolling here. In the meeting this morning, we do have presence on Facebook and LinkedIn. I know we have special advertising we do on both sites. If that's something you have some interest in, definitely take a look at our posts we have on both Facebook and LinkedIn. We do some special contests we do every now and then on those sites, so great way to get involved with those. Again, we are going to have Andrew join us here from EquiTrust this morning. We do appreciate him joining us today, and we got a great group of people on this morning, so we appreciate Andrew Gabriel joining us here on a Wednesday morning. Sorry about a little delay here, Andrew. We got a little technical issue here. We got that figured out and got the thing going here this morning. I do have you up on the system this morning here with your screen showing now, so I appreciate you joining us here on the bridge this morning. So great long-term care annuity product that EquiTrust came out with about a little bit over a year ago, and I know they've seen very good success with this. I think they're revamping it slightly here the last few weeks, and he's going to be going over some of the latest and greatest here on the bridge. So welcome aboard here, Andrew.
Thank you, Matt. I greatly appreciate you having me on today. You know, I'm the internal wholesaler here at EquiTrust, so I partner with Leon Fitch, and I've had a lot of exciting things going on here currently at EquiTrust since I've been on. Came on here about 4 months ago. You know, we've got the upgrades on the lifetime income benefit riders. We've got this bridge with the long-term care rider, and then we're rolling out with a new product here in September, a single premium life insurance product. So a lot of exciting things going on here. But what I'm going to discuss today is the bridge. Bridge being a index annuity chassis with a long-term care rider. So you think of like an index annuity with a lifetime income benefit rider. It's going to be the same thing, but just with a long-term care rider. So we'll go into the bridge now with the agenda and just kind of addressing long-term care coverage, where we're different, the wellness program, product details, and then product positioning, licensing, training, and then the video as far as the underwriting goes. So why bridge? Well, first of all, like I explained here just a little bit ago, Bridge has an FIA chassis. That's where we're different. A lot of them have just not a FIA chassis where the indexes can grow. We're a flexible premium, so that's nice. We are simplified underwriting with a guaranteed approval. That's right, you heard that. There's no yeah buts, it's a guaranteed approval no matter what. Even if they were answering a few of those questions yes, then we're going to give you a secure rating. We have the wellness program, NeverStop program. Also, we have indemnity claim processes on there. The custom lifetime income benefit structure, one size fits all. And then we have the charge structure there. And then the completely digital process as far as the application going through that. It's kind of very much like a, will you be familiar with the like e-application Firelight and whatnot like that? So it's on our Bridge microsite that you would be able to go on and do that application. So let's go into this here a little bit. The dilemma, and Leon Fitch always likes to say it more like it's actually the problem, right? Right now, concerns of 88% of the, or almost 90% of the traditional long-term care coverage, they're just not offering anymore. And if they are offering it, 10% of the companies are very expensive, right? So we have to find a solution for our baby boomers to have long-term care and have it, what Leon always says, have the cake and the icing to go along with that. Like we just talked about, 70% of them turning 65 today will need long-term care services and support. 66% of the caregivers use personal savings on their retirement savings. And then 88% of the adults between 50 and 80 of age want to age in place. So as you can see here, showing the cost of long-term care, that has gone up pretty substantially, a little bit more than what this shows now. And then you could just see what the cost is for skilled care, even nursing home, assisted living, or home health aid. And that's the nice thing about this, is that they can be in a nursing home or they can be at home. And that's typically a lot of the times where people want to be, is at home being taken care of. So let's go into the nuts and bolts of the product. How can Bridge help in that area? Well, we've got three areas here. We've got the long-term care coverage, and then we've got the ability to grow the asset, which is that index annuity chassis, and then we've got the wellness program, that's the NeverStop program that we'll be talking about here today. And then you have Bridge. So here are the product details. It is issue age 55 to 80, okay? Minimum premium, $50,000. It is non-qualified only now. We are looking into qualified here soon. I don't have an ETA on that, but we are definitely, our actuary and our compliance and regulatory are looking into that for sure to definitely have that, because there's a lot of money obviously out there for qualified as well. So it's just definitely something we're looking into. We have a 10-year surrender. You can do 10% penalty free after the first year. And like I said, the accumulation value potential, we have 5 different indexes that you can go into, plus a fixed account. The flexible benefit base, meaning that you can add flexible premium into it. Street commission is 8% and 6%, 55 to 70, and then 76 to 80 it's 6%. What I'm showing here now is our actual long-term coverage ratios, meaning depending on when they go through their underwriting process, we have 5 questions that they'll answer. And if they answer all of those no, then they'll go through the underwriting process and they either get preferred, standard, or secured. And I can tell you that 70% of the people that go through the underwriting process do get a preferred rating, okay? 10% is standard and 20% is secure. But you can see our max coverage ratios at age 55, it's 325%, and so on down the line here. And then we'll go over an example here of an illustration here in just a moment to give you an idea of these coverage ratios and how the benefits do work in regards to that.
You guys have really easy to use software for the Bridge also, correct?
That's correct.
Information in.
Yep, that's correct.
The possible coverages and get a good overview of what's available.
You got it. Yep, there is a calculator on our Bridge microsite that they can go to, and there is a calculator all the way at the bottom, or they can actually do another more comprehensive type of illustration that they can go in and enter all the information as well, and they can determine if they want to do a preferred, standard, secure, and they can illustrate all 3 of these because they won't know what it'll be until obviously after the actual underwriting process, but they'll be able to see what they would be able to get at their age and the benefit base and whatnot. So the rates here's the 5 indexes that I was talking about, and the fixed interest rate. Pretty solid on the fixed interest rate of 5%. A lot of our competitors are out there a lot lower. Then we have our S&P 500 point-to-point cap and all of these. Here's the illustrated rate that we're going to illustrate at. And a lot of times advisors will ask me, what should I put my client into? Well, a lot of the times I would say, putting them into the cap or participation rate is probably the best. Right now, the Barclays and the Mark are not performing as well. So currently with the Fed rate interest rate environment where it's at right now, hopefully that will change as the Fed lowers rates. But currently with that environment, these are not performing as well. So, but we still got that solid fixed 5% rate. Here's the riders that we do have to offer on the actual product as well. We still got the normal nursing home waiver, the terminal illness rider at no additional cost. And then here's your long-term care rider that we talked about. It's automatically included. It talks about the charges. There's a premium load, 1% the first year. So for example, if you put in 100,000, that 1%, then that fee is going to be $1,000 for that first year. And then the charge will be a monthly charge based upon the net amount of risk. So we can discuss that here in a moment. And then we do have our NeverStop wellness rider, which is something that we can go into. I don't get into real details, kind of wait until the end a little bit, just to kind of go over what is advantageous for the NeverStop wellness rider. But that's something we will talk about as we get a little further into the presentation here. The better access for long-term care benefits. What do we have to offer, that sets us apart, at the end of the day? So we have a monthly benefit payment stability, same amount each month, indemnity-based benefits. So the nice thing about there, you don't have to submit any type of receipts. It's just failing 2 of the 6 ADLs or cognitive impairment. So the doctor would just sign off on a form that they'd send back into us, and then we're going to pay them a monthly payment for the rest of, up to 5 years. My apologies. Then we have assistance for consumers to achieve goals staying in their home if desired, and that's kind of what we're talking about. Once again, the NeverStop wellness program, and then the freedom to use the funds how they wish, meaning they don't have to necessarily, they can pay for groceries with this. That payment is going to be paid directly to them. So it's not going to be paid to the long-term care facility or to, a long-term care provider. It's going to be paid to them specifically. So that's kind of how they wish to, allocate their funds, is however they want to do that. So here's the long-term care rider, designed going over the expenses. The benefits are provided by a long-term care benefit base, the coverage ratio on issue age, risk class, and the maximum coverage is $1 million. And we can kind of go over that here in just a bit as far as how we would figure that out. Here's some more information as far as the form, like I was talking about, how you would submit the claim, the doctor for certification unable to form 2 of the 6 ADLs, doctor provides plan of care, and client must be a U.S. resident, and all of that good stuff. So we'll go over that. So here's the assured underwriting process. We are partnered with Assured Allies. And this is, like you said, what you see here is a state-of-the-art underwriting video, okay? And when we say that everyone is approved, everyone is approved, okay? So we do have 5 pre-screening questions here, as you can see. And those different questions, the first 3 questions, if they're all answered no, then we'll move you on to 2 more questions. If they're answered no, then we'll move you on to the underwriting process. Now, if those first 3 questions are answered, yet one of them's answered yes, then that's automatically a secure rating, okay? But in those first 3 questions, if you answer no and you go on to the 4th and 5th question and answer a yes, then we will still allow you to go on to the 20-minute underwriting video and be able to do that. So basically, the underwriting videos consists of cognitive impairment and testing physical abilities. And like I said, it's only a 20-minute video, so it's very easy, not very painful or anything like that. So there's no going over medical records, nothing as far as blood, nothing like that. It's just strictly a video going over, like I said, the cognitive or the physical abilities on that video. And you'll want to make sure that the client does have very good internet access, because if it does, not do well, then they have a lot of issues with that. So definitely be something to make sure to tell your clients to have a good internet access and all of that. Now we're going into an example here of David. David's age 65, retired with single 3 grown children. His objective is live independently for as long as possible, preserve his assets, and avoid burdening his children for assistance as he ages. So as you can see here, typically we would have 100,000 here just to make it a little bit easier, because some people don't necessarily have 250,000 to be able to put into long-term care. But in this example, you've got 250,000 times 315%, because he's a preferred class coverage ratio. So his initial benefit base is 787,500. But in that example of 100,000, same thing, you take it times 315. So then you would have a 315,000 initial benefit base for that. So we'll move on to the examples here and showing how putting bridge into action 10 years later. As you can see, the initial premium accumulation value of 250,000. And then you can see the vesting period, the premium of the 315,000, that will give them 787,500 initially right away, okay? And then you will see that is our net asset, where you would figure the monthly charges. So you would minus 787 minus 250 to come up with the monthly charge for the actual charge of the long-term care rider. So you'll see the index credits, depending on what you put them into, but has gained in those amount of years 464,000 10 years later. And then with the 2% per year until claim, they are going to get 959,958. So there is a 2% that they will get each year on that initial benefit base, kind of like a roll up, like on a lifetime income benefit rider. For example, if they get like 8% for 10 years, this is 2% for up to 20 years. But in this example, you're getting it for 10 years, and it's showing that it grew to, the initial base was 787,500, and it grew to 959,958. So just giving you an example of how the bridge is working. So the accumulation value is your chassis of your index annuity, and then you obviously have your long-term care rider over here on this side of things. And then the wellness credits, the NeverStop. And that was something I was going to explain, is exactly what that is. The NeverStop program is something additional at the that Assured Allies will set up with the client, to where they can like set up to get like different hearing tests. They'll give you points for like a Fitbit, for walking for steps. As far as like a gym membership, if they like would submit a receipt for that, they're all going to get wellness credits for this. And this just shows, for those wellness credits, going to give you an additional 17,132 per month on top of what that initial benefit base plus 2%, and then that equates to that 1,027,911 for that 10 years. So and we can, like I said, offline, if you guys have any questions in regards to the NeverStop or wellness program, we can definitely go over that.
So those wellness credits basically just give you an additional credit,
a little bump
for the total.
Yep,
that
correct.
17,132 is actual monthly payment you're going to get based on the 5-year payout, correct?
Correct. Yep, that's correct.
So you probably get just a few extra dollars per month based on that wellness credit.
Yep, correct. You got it.
And I did have a question that came up on your caps and participation rates. There's no fees for those. Those are automatically included with that no fee for the cap rate and for the participation rate, correct? There's no fees on those strategies.
There's no fee on the index annuities or on the indexes. Nope.
You got it.
There's no fees.
Thanks.
Yep. And so here's David's story again, the concern of diversifying his investment portfolio, wonders if he'll have enough. Father's 93, mother deceased. And then obviously, could I afford long-term care if I needed or lose my savings? So what is the potential solution as we can see here? Well, the bridge checks the box in all areas because you got an index annuity where you can diversify in the different indexes we have, which would diversify his portfolio. And then we've got a science-based personal wellness program. And then we have that long-term care rider that would help him with his needs when he would need to get into a long-term facility or assisted living at home at the time of that claim. And then obviously you can see here David's successful aging plan. This is kind of more of just the talking about the NeverStop, you know, as far as improving sleep. Like I explained to you, like the hearing loss, getting your hearing tested, you know, doing yoga, you know, a lot of these different things here will give you credits towards that NeverStop program. And here's just the now example and total is this hypothetical example that we just talked about. You know, the benefit base where it grew 2% from that 787,500 to 959. The NeverStop wellness programs got it to 1,027,911, and then you divide that by 60, and you're going to get a monthly benefit of 17,132. Once again, here's a bridge illustration that we'll go over. Once again, this is just showing exactly what we're showing here, but it's just now in an illustration format. Okay, it's just giving David age 65, preferred status, and then you have initial premium of 250,000. Once again, that coverage ratio of 315 to get them in the initial benefit base of 787,500. And here's the accumulation value of what it's doing over that period of time. And then here shows the monthly benefits when you return the actual claim on. Now I can tell you, and I haven't really gone over that, but there is a vesting schedule on the bridge. So the vesting schedule goes 20, 40, 60, 80, okay? So after the 4th year, so it'd be 5 years and 1 day, they are fully vested in that long-term care benefit. So say they were to want to take a claim, they can take a claim right away if they wanted to in that 1st year. However, they're only going to be vested 20%, okay? Same thing with in the 2nd year, they will only be vested 40%, 3rd year 60, 4th year 80, and then in the 5th year they'll be fully vested in that actual benefit that they can get that full benefit for. And here's just another example of the 65-year-old preferred 250,000 selected coverage, only 100,000 initial benefit base. So it's just showing if you only had a selected coverage of 100,000 and your benefit base was 250,000, what the difference in payments would be, because you see it's pretty substantial. Initial benefit base, and then you can see here it's a lot lower. Here's the key features and benefits of the actual bridge. Once again, like we talked about, you know, with the index annuity, it grows more than a traditional fixed, like some of our competitors. We have lower charges, no mortality expense, value if the long-term care benefit's never used. Meaning is if they passed away and they never used this long-term care benefit, that index annuity is, once again, it's principal protection, and it's got whatever growth the indexes have grown over that period of time that beneficiary can take away as a lump sum. So that's nice, where obviously with true long-term care, you're paying in premiums and you're simply just, I wouldn't say throwing away money, but if you never use that long-term care, then you never use that benefit and you've lost that money. So that's what's so powerful for this product is that, you know, at least your beneficiaries will get the value of getting that money back. Flexibility, choosing the level of benefit, 1st year multiple coverage. We got the NeverStop wellness program that, unlike other competitors don't have. Once again, the guarantees, the underwriting. Once again, like I said, there is the approval. No matter what, we're going to approve you. So that's a nice thing. And then your charge structure on the base of the net asset risk amount there.
So I just launched a quick poll. So people have interest in getting more information on the bridge. You can mark off yes on the poll itself. We'll be glad to get that out to you. And then I did have a question that came up. Do you guys allow joint ownership on one of these bridge annuities? Or I think it has to be individual, correct?
That's correct. Currently, we do not allow joint. That may be something we're looking into as well. Those are two things, obviously, like qualified money that we don't accept right now, and joint that we don't accept currently right now. And that may be something down the road that we will look at as well, but currently we do not.
Do you know what the average age is of the person that's been buying the bridge so far? Has it been someone in their 50s, 60s? What's your thoughts on that?
Yeah, I would say it's right around 60s, mid 60s. Okay. And the average amount, we're looking right around 125,000 for initial premium coming in.
Good.
Yeah.
So it's a little bit higher than your normal annuity would be based on the bridge. It's a little bit higher premium.
Yep, correct. Yep. And obviously, as you know, that it might be a little bit lower than if it was qualified assets, though, because people are going to have a lot more qualified assets than they may have in a non-qualified account. So that's why you're seeing it a little bit lower than what you would see in qualified money. But
right. And 70% of the people being issued as preferred, you're basically seeing a triple. So if you're putting 100,000 in, they're going to probably have at least $300,000 of benefit, and really advantageous for someone that's going into these facilities. And those numbers you put up, I mean, based on my personal experience, those costs are pretty low. What you have up, I mean, I'm thinking numbers are about 50% higher. I mean, I don't think you're going to get a skilled nursing place, for less than 10 grand a month now. And I think the assisted living, you're probably looking at least $6,000 to $7,000 a month based on what I see personally in Omaha. And those rates continue to jump up every year, probably by about 10 to 20%. So the cost of being in these facilities is skyrocketing right now, from what I see.
Especially with inflation as well. So
it
definitely does not help. So I mean,
so I'm gonna shut down this poll here. So appreciate you voting on that. Looks like a majority of people do want additional information on the bridge, so we'll get that out to everyone. I'll email everyone the brochure and additional pieces that I'll get from Andrew. We'll get those out to you here later today. So I'm back with you, Andrew, on your slides.
Not a problem. So, now it comes down to the sales opportunities like we were talking about, where we see the money coming in, 1035 exchanges from annuities, life insurance, money market, check savings, CDs, clients previously uninsurable for traditional long-term care insurance, annual reviews or alternative traditional long-term care. So those are kind of where we're seeing a majority of the money coming in. At the end of the day, this is something, on average, half of the people age 65 are getting denied right now in long-term care. So this is a huge opportunity for you guys to be able to look at your client base, your book, and see who does need long-term care, because everybody at the end of the day, unless they're really wealthy and can afford that, the middle class definitely needs this, and is something that is just going to be, like I said, 60 or 10,000 people retiring a day is definitely going to be a need for sure.
And here, another question just came up here, Andrew, on the continuation of benefits. So there is no additional rider available at this point. So once you've gone through your 5 years and gotten all your money out of this plan, then it's basically going to come down to the client having to have other assets to cover those future costs.
You got it. Correct.
Is that what you think? Yeah.
Yes, correct. You got it. Yep. So I think that's, that's another thing too, as financial advisors, that's something that, kind of playing the inflation game and the power of money, looking at what they may need down the road versus now versus 10, 20 years later is definitely going to be something that you will definitely want to look at for sure. So But yeah, wide bridge, once again, where we're different, we got the FIA chassis, the flexible premium, simplified underwriting with a guaranteed approval, like I explained, the NeverStop program, that indemnity claim process where you don't have to submit some receipts or anything like that, the long-term care benefit, just one size fits none, the charge structure, and then once again, the completely digital process at the end of the day. Any questions you guys ever have, please contact us at our sales support number here. Today, actually, we're having a company outing for the Iowa Cubs, so nobody will be in the office here in the next probably half hour. However, we'll be available tomorrow and Friday, but just wanted to let you know that. But yeah, we'll be around and let us know if you have any questions. So, as far as accessing Bridge, there is a Bridge microsite on our agent website, okay? So when you log into the agent website, there's gonna be a tab Bridge over to the far right-hand side. You just click on that and it'll bring you to this page here. And it'll have everything dedicated for marketing materials, what you see here, underwriting, licensing, illustrations, where you'll actually assign the actual, schedule the underwriting, where you'll actually do the application and everything. So that's exactly where that will be. So, and then, at the end of the day, like I said, we have the fully digital process, electronic app, the convenient video interview, and quick underwriting decision. So it's only taking, 20, 25 minutes at the most for that client. Any other questions you guys have for me today? Is there anything I can answer or anything, obviously?
Another question came up. So when they get through the 5 years, there's not going to be any balance left in the contract, correct? They basically,
Correct.
The contract has been eaten up, and that's
null and void.
what happens.
Yep, exactly.
But if they do pass out, or not pass out, but pass away along the way, let's say that they die after 1 year, the beneficiary would still get what's left in the accumulation account, minus what they've taken out, correct?
Correct, minus any withdrawals. Yep, you got it.
Right, so if they're getting $17,000 a month, that's about, let's just say it's $250,000 that first year, but they start with 300, and the beneficiary get the remaining 50 paid out to them in a lump sum.
You got it.
And those rates are very competitive. I mean, if you have a 10% cap and a 5% fixed rate, I mean, those are above average right now compared to what other companies are paying, and way above average compared to other long-term care combo products. These are way higher than most.
Yeah, and I think that's the key there. Well, you hit the nail on the head. When it comes to our advantages of our product versus other competitors, I would say the indemnity based, for sure. Where we don't have to submit anything and we just pay it right to the client or the owner. We have much stronger account value for sure.
And when you're doing these videos, I mean, it's probably wise for you to be with the client when they're getting set up for that, because a lot of times clients aren't the most savvy when it comes to some of these technologies, and if you can help them get that set up, it's really going to make the process much easier, and it's going to be a much better chance of them getting preferred rates versus the other two options.
I totally agree with what Matt just said there. Yeah, definitely being with your client. Maybe, set them up and then go into the other room or something if you have a separate room, because I know that definitely sometimes it can be distracting when the agent's in there along with the client. But if you can get them set up and ready to go, then it makes it a lot easier for everyone for sure. So
yeah, and another thing we're going to talk about today, but we're kind of running out of time right now. But EquiTrust is a great place to put your stretch IRA contracts with. I know when I shop these around, they're really the only one that has a bonus up front available to the client. So they're going to earn, say, a 10% bonus based on what the market force is paying right now.
Yep.
And that's going to add to their value there on that stretch contract. And what happens at the end of the 10 years based on that 10-year payout situation, EquiTrust will automatically turn that policy into a non-qualified contract, and then the client would get a 1099 for that balance at the end of that 10th year. That way they could actually just leave the money at EquiTrust, not take any money out, and then if that 100,000 grows to 250 at the end of the 10th year, they're gonna get a $250,000 1099. But based on the tax bracket, they're still going to clear way more than they started with, based on what's going on with that.
Yeah, I agree, and that's one thing too. With the stretches, that you can look at a partial tax conversion too. We have those partial tax conversions where you could convert the money into non-qualified over whatever time frame you want to do. If you want to do it right away, or if you want to do it over a 5-year period, whatever it may be. That way, then you can just get out of the way of being in that inherited IRA or stretch IRA anymore, and just have non-qualified assets in your name, so to speak, instead of it being an inherited IRA anymore. So that's a powerful story too as well.
Oh, definitely. And I'll be giving everyone a call here after this meeting today or tomorrow morning, and kind of going over, overview of what we did today on the bridge, and anything else you want to discuss what EquiTrust has to offer. I know we've seen a huge increase in business flow to EquiTrust this year, just based on their competitive nature. They're doing an additional 2% bonus on their bonus contracts that runs through September. I mean, some really nice bonus rates. They have 10%, 12% bonus rates on some of their contracts right now, and very competitive in that space, along with the rates they have on the caps and the fixed rates, and the participation rates are very strong right now with EquiTrust. Anything going to finish up with today, Andrew? I know I hate to go beyond 45 to 50 minutes based on these webinars, but anything you got this morning you want to finish up with?
No, I think, at the end of the day, we've got a resource of products that, like you said, from the lifetime income benefit riders to the accumulation products, very strong rates, now to this bridge with the long-term care. And then, like I said, rolling out with the single premium life insurance product in September. We've got a lot of exciting things going on here at EquiTrust now. Plus, we are with now S&P, we are an A- rated company. So that is very much something that we've been looking forward to. I think the last time they said that was in 2009 that they were an A-. So almost 15 years now that it's taken, but definitely excited about that. And AM's Best went from a stable to a positive outlook as well. We're hoping to see, next year AM's Best hopefully, going over that hump to get us to an A- as well, with having the single premium life insurance product on there. Hopefully that'll diversify our portfolio enough to allow that.
Well, appreciate that. I know when I do annuity rate watch income comparisons, EquiTrust shows up, either number 1 or number 2 pretty much across the board on true, guarantee for life payouts. So they're extremely strong on that side of the business right now. So if you do have an income play right now with a client, definitely get a quote from us with EquiTrust, and they're going to show up right at the top there based on their 7-year or 10-year chassis, based on what the deferral period would be. But once again, thanks, Andrew, for joining us today. Enjoy the baseball game this afternoon. Wear lots of sunscreen based on the weather we're having here in Omaha today. It's going to be a sizzler out there. And
yes, in Des Moines it will be sizzler here too.
Out there.
Oh, for sure. We will. So, well, thanks.
That's right. I appreciate your time this morning, and appreciate everyone's time here this morning. And everyone have a great end of the summer. I know my kids start school next week, so a very early start here in Nebraska. I think Iowa, they start after the annual state fair, right? They can't start before that fair is over.
That's correct. So it's August 23rd, so it'd be Friday. So yeah, they always like to have everything started after the state fair here in Iowa. So, yep.
And if you want to go to the state fair, I know that Andrew's a big proponent of that. It starts the 8th of August. So if you're going to come to Iowa, one of the best state fairs in the country, definitely join him with the butter cow.
There you go. Exactly. You got it.
Well, have a great day, Andrew, and we'll keep in touch. Otherwise, enjoy the ball game.
All right. Thanks again. Thank you, guys. Bye-bye.
Bye now.